Gold set 7-week highs last week, but can it push even higher? Joining me today is Bill Baruch, president of Blue Line Futures. Bill, welcome back.
Thank you for having me.
So last week, gold briefly tested 1316 ounce, Bill, which some analysts think was, obviously a key resistance level. But why couldn't it keep the momentum here this Monday morning?
Last week, what also happened is the dollar began to show some signs of strength. But, it is, again, just another push towards 1360 and another fail. I believe it's going to happen. I mean, you look at the backdrop, geopolitics, trade war, in the weakening dollar. I believe it's going to happen. And in due time, I've been looking at a span of about 4 to 6 months. And we're about 60 days into that span. But I think it is going to happen before August. And I feel strongly about that.
But so as you say, Bill, if it can't happen under this context of Syria, Russia, possible trade war with China, does it mean that gold hasn't finished correcting here?
I do not believe so. I think this move is coming. This breakout is coming. I've looked at it for about 4 to 6 months, and we're about 30 days or so into that time frame. It's going to take a while. There's bears defending this, and there's a lot of bulls that are already in the market. You can take a look at the net long position, the commitment of traders. That's something, in the sense that if a lot of people have already bought, you're not going to get that extra emphasis in buying at these levels. But I think once it starts to push on the breaking out, you're going to see a lot of buyers come to the table and take this thing a lot higher. I think it would go to 1420, 1430 pretty quickly. But yes, you're talking about the landscape right now, the geopolitics and the trade war. They're all out there. But at the same time, the dollar also hasn't made that next leg down. And I think that next leg down in the dollar is coming very soon. One thing I think is very interesting that people are not talking enough about is the new $1.3 trillion spending bill that President Trump signed. And this is the biggest increase in defense spending in 15 years. And if you look back when the dollar index really topped in 2001, 2002, that was coming on the heels of the biggest increase in defense spending in decades at that time. So I think the dollar has a lot of room to go down. But the fact that it has not made that next leg is really holding back gold from that ultimate breakout. And another reason, too, is the silver. Silver's just remained a laggard, and you have a net short commitment of traders' position in silver of near 2 to 1, or actually more than 2 to 1. And silver has the 200-day moving average right around $16.90. Let's call it $17 as a psychological level. Silver needs to get out above there. And I think if you start to see silver join the rally or the good price action that gold has seen this year, then working together, that breakout will come.
So are you even more bullish silver then? Is that what you're saying, Bill?
I think silver has tremendous value down here. Really, one of the best risk-reward plays out there is buying call options in silver.
All right. And finally, switching gears to stocks, Bill, earnings kicked off with a bang here this Monday. Are you surprised by what you're seeing?
I think the banks need to start joining in to see a little more of a pump up. Friday, despite JP Morgan and some of the others, they had great earnings, but the banks finished lower. Bank of America, a solid showing today, too. So if the banks can really get going at Goldman Sachs tomorrow and you have Morgan Stanley Wednesday, the banks can become a leader. Tech's been holding really well. I expect to see good earnings. One thing that's really interesting is the technicals in the S&P. 2680. It's a rare major 4-star resistance level that we've had. If we get out above 2680 intraday with strong volume, I think that's going to take it to the 100-day moving average just above 2700. But ultimately, I'm looking at a target 2740, 2750 for the next move higher. So about 3%. A very interesting bullish ascending triangle that's being built. So you don't want to see price action in the S&P get down below 2640. But I am bullish. I think a move out above 2680 is going to take it 3%.
Bill Baruch, thank you so much for your thoughts.
Thank you.
And thanks for watching. We'll be back tomorrow.